We cannot talk about the advantages of any investment vehicle without equally considering, its disadvantages. And commercial paper is not isn't exempted. They have uh, their peculiar risk. And so in this particular video, I want to talk about the disadvantages, the drawback, or the pitfalls of investing in commercial papers. And so here are the disadvantages of commercial papers. Number one here is credit risk. When it comes to credit risk, actually, while generally considered low risk, of course, no investment is low risk. Even cash has its own element of risk, and that is inflation. Commercial papers are unsecured debt instruments, meaning investors are exposed to the credit risk of the issuing corporation. If the issuer faces financial difficulties or default, bondholders could lose their investment because the paper is not secured. In other words, the company did not mortgage any of its property for these papers. So you discover that should in case the corporation goes bankrupt, you understand that you will not be able to recover your money. You may lose your capital. Should in case in a case where the issuer goes bankrupt. Number two is limited to large corporation. It's not just something any organization, any corporation could go into. It's kind of limited to, large, established, kind of blue chip corporations. Commercial papers are primarily issued by large, financially stable corporations. Smaller or less credit-worthy companies may not issue commercial papers. Even if they do, I don't think people will be eager to buy. So limiting the availability of these instruments to institutional investors focus on larger firms. So everything about them is kind of limited. All right. So a smaller kind of investors like I and you may not participate. It's for large, big fund managers, institutional investors. This particular instrument is what they tend to invest in. Number three is lack of interest payment. When it comes to commercial paper, there's no interest. They don't pay interest or coupon like bonds. They only offer this instrument at a discount. All right, discount to their face value. So at maturity, they will pay the full money at face value, and then the difference between the money, the fund at face, the money at face value, and what you bought the paper for. That difference is what constitutes your returns, constitutes your profits. Number four is liquidity risk. For lower rated issuers. Well, even though it is issued by reputable companies, corporations, even at that, some corporations are relatively lower rated. They are rated, lower than some other ones, And so commercial papers actually, while they are issued by top-rated companies or, that are, considered highly liquid, those from lower-rated issuers may be harder to sell in the secondary market. It's not just investing, but should in case the need to sell comes, can you sell it very easily? That's where the issue of liquidity comes in. That's the ease of disposing your assets whenever the need arises. And this can result in liquidity risk for investors holding commercial papers, from weaker issuers. You are forced to stick with an investment you cannot dispose of. Thank God is of kind of a limited, time duration. Number five is limited to institutional investors. It's not just for people like I and you. It's not for But I'm believing God that with time, okay, it's just a matter of time, we will become high net worth individuals, who will equally participate in these juicy investments. So limited to, institutional investors due to higher minimum investment requirements. That's in the US currency is often $100,000 and above. $100,000 is how much in Nigerian money? That's that's that should be around 180 million naira thereabouts, if I'm not mistaken. So commercial papers are generally accessible only to institutional investors, money market funds, or high net worth individuals. So retail investors typically can participate. I and you, we are retail investors. We can't participate in this market, at least directly. We can participate indirectly by investing in the funds that invest in these commercial papers. You can do that indirectly, but not directly. Please subscribe to this channel, all right, and like these videos. And if you go through my channel, I've gotten about over 200 videos related to investing. Please make sure you watch the other videos, like them, subscribe to this channel. It will encourage me a lot. Depending on your support, to make this particular endeavor worthwhile. Number 7 is no principal protection. Yes, your principal, may not be protected. And so if the issuing corporation defaults, investors in commercial paper may not get their full principal back. That's why you have to be very, very careful the kind of company you invest in. Can the company go bankrupt? Can it default? All right, take into consideration. Of course, those fund managers can do that. So as there's no collateral backing the debt, this exposes the investors to the potential risk of losing his principal investments. Number 8 is economic sensitivity. Our commercial papers are sensitive to economic cycles, to economic conditions. So in time of financial instability or economic downturn, companies may find it harder to issue commercial papers or face downgrades in credit ratings, increasing the risk for investors. Usually the economy affects the stock market, affects companies' operation, affects individual buying power, and generally, it typically affects company share prices, as well as related investments like even commercial papers. They are sensitive to the economy. Number 9 is short-term nature. While the short-term nature of commercial papers can be an advantage for some investors, it also means that they have limited growth potential. Investors looking for long-term income or capital appreciation may find commercial papers less attractive. It is short-term, actually, and there's limited growth. In other words, it can never grow beyond the face value. If the face value is $100,000, your investment can never grow, above $100,000. So the growth, the return is kind of capped, cannot go beyond the face value of these instruments. Number 10 is regulatory risk. The commercial paper makes it the commercial paper market actually is subject to regulatory changes, which could impact its liquidity, its issuance terms, and its overall appeal to investors. So change in financial regulations could increase costs or introduce new risks for both issuers and investors alike. So these disadvantages make commercial papers more suitable for sophisticated institutional investors, who can manage the risk and who equally prefer short-term, liquid, low-risk investments with a focus on high, credit quality issuers. Although it's not meant for the individual investor, but we can still participate indirectly.